Hello traders, this is Rich Derrick from Tradesight. This is the market preview for this coming session. This is going to be for Wednesday, April 3rd, 2013. The markets were higher today, pretty decently on both sides. The Nasdaq side definitely outperformed the broad markets. Now you can see the NQs were up about 0.9%, and the ES futures were only up about 0.5%. So definitely saw some positive price action, and finally saw the Nasdaq coming on and asserting itself again. Well, this is all well and good. The real problem here is that there's bad news to go with this good news, and the bad news is down here. If you look at the advanced declines, we were negative on both sides. We were negative about just 100 issues or so on New York, and we're negative about 275 on Nasdaq. So what this leaves us with is a condition where the market averages are advancing while the market internals are potentially deteriorating. This is a real cause for concern for the bulls, and if this persists, this is exactly the type of an environment where a bull market starts to really die and a bear market is born. Let's take a look now first at the cumulative advanced decline lines. All right, now here's a look at the cumulative advanced decline lines. At the top, we've got a look at the NYSE cumulative advanced decline. And you can see that I've added a trend line here to the chart. The trend line is still pointing higher, but we're starting to get a little bit of a rollover here. Let me expand this a little bit. And we're starting to get a little bit of a rollover here. So this is definitely a cause for concern for the bulls. And if we start to break this trend line to the downside, and if the market continues to punch out new highs, but the cumulative advanced decline line is declining, meaning we're still registering negative net advanced decline readings on a daily basis, that is going to be pretty much the end of this run. Hasn't happened yet, but we definitely want to be on guard for that. The Nasdaq side is starting to roll over a little bit more aggressively. We have a potential lower high here, which just about qualified itself today, and we're getting close to the lower boundary of this regression channel that's moving to the upside here. It's a regression channel. I only have the one line on here, but it certainly is moving positively. If we get to the bottom of this line, expect to find support there. If we don't find support there and this continues lower, that's going to be a real problem for the market going forward. So we're going to be watching this on a daily basis now. This is going to be very, very important to make sure that this little bit of a disconnect, this divergence that we have with higher equity prices and lower negative internal readings as measured here by the advanced decline lines, has to reassert itself. We've got to straighten this out. If this continues and this persists, that's going to be a real death knell for this bull market. And before we start talking about the other charts here, I will just mention that the one standalone indicator that I will not pick a fight with is a cumulative advanced decline line. If the cumulative advanced decline line is rolling over, get out of the way on the long side and start getting on the short side. That is the one single indicator that time after time after time proves itself to be reliable and essentially infallible. So make sure you're on top of this. Now looking at the ES futures, we scratched a new high out. We made a new high close on the move. You can see very nominally, and we did make a new high on the move. 1562.50 is still the near-term number that's in play. And as you can see by the MACD here, the market is climbing, but it's got essentially very, very little momentum. You can see this move up here, MACD line was climbing nicely, it recharged itself here, and then started to lift again. But there's really very little momentum to the upside here. It's really just kind of a pounding higher, if you will. Moving on to the NQ futures. NQ futures swept to a new high on the move, essentially matched the closing high. We're still kind of glued to this 28.1250. This number was, we talked about this in the lab today as things were higher. So just watch out for a pullback here to this 28.1250 because the advanced declines are not supporting these higher prices today. And in fact, we did pull back in, and a lot of those buyers who paid up midday today were kind of disappointed and left with some losses. The the chart's still positive. We're above all three major moving averages. We did have some relative strength, which is good. We really need to break away from this 28.1250 to really get some distance here and to really sort of push up. As you can see from the MACD is relatively flat and really has no positive momentum at this point. All right, elsewhere here, here's a look at the NDX SPX cross. While the cumulative advanced decline lines are definitely cause for concern, this is a bright point here for the market with the NDX finally coming on and showing some strength. What we have to do is we have to see if we can follow through here, get above this 180 level, and maybe develop some kind of positive momentum here in the NDX. That would be very welcome for the broad market and would really help the overall advanced decline
readings that we've
seen for Nasdaq, which have been weak. We are getting close to that trend line. If you
dollar index daily chart on the right side of your screen, still 10 bars up on the seeker, hold back a bit today.
All right, here's a look at our 10-day trend. This is also with the S&P on here.
Below the value area.
We hit this overbought reading and essentially just leveled everything off here. It really didn't produce too much of a downside here in the market.
First
We
target is
are
45 to 50
approaching,
pips, which is
but
under
not
R1.
yet,
Stop is under 20 pips back, which is under that upper
over
break
sold
tri-star
threshold
level
of
by a bit.
1.35.
Plus spread.
So right now we're still essentially
so it's a value rate play
between
crossing the break and then the
1.35
pivot.
oversold area and the 0.
Not a bad play, but the play for strength in the dollar, I don't see anything on the pound.
For now, it has room to go either way.
About 70 pips away if we went, fortunately.
The S&P TLT cross here is still within the boundaries of this trend channel, so we do not have a break either way yet. We've essentially just been going sideways here for just about 3 weeks now, pulling back off of this high. So right now we're just kind of still going sideways here with a little bit of a risk on activity today. You see the line moved up. We're still above the that breakdown level where people are taking risk off in earnest. So for now, we're still kind of contained here. Expect that if we continue sideways here and get to this lower channel boundary, we're going to get a lift here and probably see some momentum develop in risk on if we don't actually just break it to the downside. But we're not quite there yet. So as far as timing goes, still a little ways from some momentum being developed from support from this trend line. All right, here's a look at the OSX versus the oil futures. The oil futures have really been outperforming the oil service stocks, which implies that while we're up in the area of the previous high in oil, we're not going to break out and run away if we do get through there, because the oil futures have been, the oil services stocks have been lagging. We're getting kind of close here to actually retesting this key area here at about 236, 237. This kind of really doesn't look like the kind of setup that's going to break out oil futures. So this is definitely a cause for concern for the bulls here. All right, and here's a look at the multi-sector daily chart. You can see they put more risk on today. Big performer today was the BTK, was real strong, pushing out to a new high. The SOX and the BKX were both fairly weak on the day. The SOX was really the weaker one, but the real standout was the XAU. Essentially matched its previous low here, and you can see that this is still being used as a source of funds for the risk on trade. This is starting to get pretty extreme here. We're really starting to diverge. The one thing that's a little bit troubling from this is that we didn't really have the risk on asset class really just across the board rising while we were seeing that XAU to drop to the downside. So we really saw it in the BTK heading up, but the other indexes are really showing more signs of fatigue. So this is starting to get a little bit extreme here. And if you see just a couple of indexes heading higher while gold's heading lower, that might be another sign that some kind of a change up is coming soon. All right, now here's a look at the individual sectors sorted from best to worst. The broker dealers were the best on the day. The BTK, as we had talked about earlier, was very strong. The pharmaceuticals continue to be strong. Keep in mind here that we're 10 days up in the secret and the Comer count. It's pretty rare that you wind up getting a 13 exhaustion, both in the secret and the Comer, really within a candle of each other. We're obviously 3 days away from that at least. So keep an eye on that. If we do get there, that will be definitely a very notable notable occurrence for the pharmaceuticals. While the oils, the banks were kind of middling here. Obviously, as we talked about earlier, the XAU was weak. The transports are still taking the brunt of the hit from the broad market here, down 1.2%. Defense index was also weak, and housing was weak. So definitely, some mixed messages out there as far as the sectors go. But the transports on a roll over here is definitely not really welcome at this point in the move. All right, here's a look at the BTK. BTK made a new high on the move. The one thing that's really sticking out to me though is we have a trend termination candle here, so I'm definitely going to be looking at the BTK for shorts tomorrow. The reason is we've got a 4-day pattern here. We've got an up day, we've got a second up day, we've got a candle that makes a new high above this previous candle. That's green candle number 2 here. So we see this candle here, this dark colored body candle, makes a new high but closes lower on the day, and then we've got another up candle. So this 4-bar pattern is what we call the trend termination pattern, and this is usually kind of the end of an advance. So I'm going to be looking for a short in the BTKs tomorrow, looking for exhaustion off of this 4-bar pattern. So again, just to recap here, it was a 4-bar pattern. We've got 2 up days, then we've got a day that makes a new high but closes down on the day, and then we've got a subsequent high candle that makes a new high on the move. Now, see, the thing is, we've got 2 up days, and we've got this change up candle, this dark body candle I call the change up candle, where we make a down day but doesn't really reverse the pattern. What that does is it gets some longs out, gets some shorts on board, and then we've got another up day here. So what it does is it washes out those kind of nervous shorts. They take it back. The longs have already kind of been out from the previous candle, and then you get a couple new guys coming on late, and what it does is just loads everybody onto the same side of the trade, the long side. It gets the shorts out, gets more longs on board, so really just loads everything up here for a break to the downside. We'll have to see if that can materialize tomorrow. And the OSX was fairly weak. It actually undercut the previous day's low, closed lower on the day. We've got this series of potential lower highs here. This is effectively a lower high here, so we could have one more. This neckline here on this trend line here at about 234, 233 is really important, because that's been key support, and if that gets broken, it's really going to change the character of the chart here. The SOX index was again really weak. I think the notable development here in the SOX, aside from the 13 exhaustion that's still active here and starting to weigh on price, note that we closed below the 50 DMA. The 50 is the red line here. This is the first close of the year below the 50 DMA in the SOX. SOX is very, very important to Nasdaq overall, so this is a very negative development. Now, just to close below one of the major moving averages isn't really a newsworthy event per se. What we want to see is we want to mark off today's low, and if we do penetrate today's low, that will be a qualification that we've broken the 50 DMA, so we really got to be on guard for that. The XAU is the last laggard. You can see we got down here right in the area of the previous low close. I want to point out the zero race line of 125 is going to be key support if we do in fact head lower tomorrow. Now, as far as the other majors, I want to take a look at oil. Oil again is very strong, but really can't break through the static trend line that we've been talking about for the last couple of sessions. We've got bottoming tails here. They keep pulling it back up here, but it's banging its head against the static trend line. That was the exact high today, intraday. That static trend line going all the way back to the high of this 9 bars down. So this is a really important area. Keep in mind that, as we talked about earlier in the recording, that the OSX is not really supporting the futures to the upside here. And then finally, gold futures. Gold was weak today, breaking lower, and really the GDX is really kind of driving the bus there. All right, folks, that's going to be it for today. As always, thanks for listening. This has been Rich Derrick for Tradesight.